Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into on a daily basis what's impacted rates on a given day. Uh, Sometimes it could come from the economic calendar, could come from the headline news. Sometimes it's geopolitical, but even sometimes good news can become bad news, and the market has a different change of sentiment. And if you're on the sidelines, it might be a little difficult to understand what's going on here and why is these things happening. So we try to give out these explanations for you folks, so that way if you're following, perhaps if you're a consumer looking to follow the rates because you're looking to refinance or purchase, buy a property, well, we're hoping to give you guys some additional information for you guys, so that way you guys can have an idea when you're looking at rates, if you should lock in or if you should kind of float a little bit. Hopefully this will give you some information. If you're just simply in the industry looking for guidance as to where rates are going, well, hopefully these will provide you the right information as well on a daily basis here. A little bit about myself is I am a loan officer. I do work with a national lender, so we do loans in all 50 states. If we can be of assistance with you guys with your refinance or purchase needs, please reach out. We'd love to be able to talk to you a little bit further on how we can assist you guys. Otherwise, we can also be a resource for you folks. So if you got questions on mortgage programs that might be available, or maybe different needs that might be out there, please feel free to reach out. We're here to help you guys in any needs with any of these needs here. So without further ado, we'll jump right into the economic calendar here. As I mentioned, it's been a pretty light week in terms of what's being released. The big one this week would be tomorrow with the CPI report, which would be inflation data, which is on top of everybody's minds because that is what the Fed is targeting when they do these rate hikes and stuff. We'll talk about that in a minute, but first, we'll just kind of glance as we get every week. We get these from the MBA, their mortgage loan activity report. It lets us know if we're increasing our mortgage loans. And as you can see, on both levels, the purchase and refinance side both have dipped. So those have been coming downwards. As rates have been rising, those have been slowing down a little bit. But just on the purchase side, it's not always just that. We're getting a lot of just extremely low inventory out there. There's just not a lot out there for people to buy, and that's also part of the slowdown process. Refinance mostly is due to the rise in interest rates. But one item we did get today is the wholesale inventories for the month of December. So in November, we had a 2.1 increase month over month. Forecast was continuing that same trend at 2.1. However, in December, had a slight increase to 2.2 here. Later today, probably about a half hour here, we got the 10-year note auction. This could have a little bit of impact on the market, especially with yields as high as they are. We could see some appetite for it. The thing that could hold them off is they may wait for that 2%. We talked a little bit about some of the rates here. Some of these videos here talked about that 2% level here. There's been talk. We knew we were going to probably approach that level here soon at some point, but we thought that we would have a little bit more time. However, it looks like we could be approaching that. As we approach that, the investors could be waiting for that level to be reached versus what we're currently at, which is, as you can see on the screen here, at just under 1.93 here and underneath this technical level. So we broke above the ceiling here, but we came back below it today, which kind of helps out mortgage-backed securities. Mortgage-backed securities were down a little bit further. They're even up a little bit. In the last few moments, last half hour roughly, we're up from 8 basis points now. It looks like we're now back into negative territory at negative two basis points. So, but that's not enough movement there to create any change in pricing here for mortgage-backed securities. So as you can see here, I'll just kind of stretch it out a little bit here so that we can see it visually. Right now we're at negative 2 basis points, but really pricing will be about unchanged from where we left off yesterday. We didn't have a lot of change yesterday in movement. So as you saw here, we came down, went up a little bit, and we spiked lower, kind of gradually worked our way back up. Now we've been kind of going down over the last 30 minutes or so downwards here. So some movement, but not quite. They're just kind of gearing up for tomorrow's move with the inflation data, and they're kind of expecting going from year over year with CPI from 7% to 7.2%, and so they're expecting a pretty big number there. We'll keep our fingers to that It isn't, but time will tell once we get it. So again, yields here at 1.9, just under 1.93. Uh, so headline news, basically, Rafael Bostic, who's a non-voting member on the FOMC, he thinks he's expecting the Fed to raise maybe three rate hikes at quarter increments each, with the possibility of fourth, and he's kind of a big advocate to reduce the balance sheet draft by quite a bit. So he's kind of speaking on that terms, but again, he's not a voting member, but that's his view. We're still getting some quarterly reports, so stocks are up based on that, but they're also kind of gearing up for tomorrow's CPI report as well. So stay tuned. We could get some action in terms of the 10-year Treasury as with the auction coming up in a little bit. So that could change some things a little bit. And as you can see here, mortgage-backed securities just popped back in depository at 3 basis points. So lastly, we'll touch on is the average rate for conforming loan limit, and these do have points built into them. We'll start with the 30-year at 3.89%, and then we got the 15-year at 3.16. So as you can see, the 50-year is now above 3% range, and the 30-year is approaching the 4% range here. So we're getting pretty close to the higher levels, that we have, that we saw before the pandemic here. All right, folks, again, if you guys like these videos, please help us out. We greatly appreciate it. If you could smash that like button and share, I would greatly appreciate that. If you guys got questions or anything we could do to help you guys out with, please feel free to reach out. We are here to help you guys out also. We do greatly appreciate you folks for watching, and we'll look forward to see you guys in tomorrow's video. Thanks so much. Take care. Good night. Bye-bye.